Well, Brait is an investment holding company with its largest asset being New Look, a European and Chinese fast fashion retailer.
Right, so this is interesting. We include this one in this conversation because of New Look, but of course it also owns the Virgin Active business. It also owns Premier Foods down here and a business in the UK called Iceland Foods. But it's an interesting story. Wait till you see the share chart of this one.
Market cap 41.3 billion rand, PE ratio of a negative 71 and a dividend yield of 1.7%. We've got to get that share price graph up immediately, as Paul says.
That's not a happy chart. So it does extremely well. Everybody loves John Nodder, Christo Visa. They're going global. They're going to do another deal like Pepkor, because of course Pepkor they sold to Steinhoff. And it peaks out there at about 160 odd rands a share. Currently trading below or around 70 rand a share. So it's been very ugly. It's down 50% or more. Yeah.
Joseph, talk to me about Brait. Firstly, were you exposed?
Well, we actually managed to get out of Brait around after it has come down about 10-15%.
And you didn't tell Paul about this exit?
Paul, actually, I tried to call him, but his phone was off.
Please keep your phone on.
We have written them all the way up and unfortunately all of the way down.
I think it was a good story over the last 3 years, you know, when they're going to Virgin and doing a lot of acquisitions. And certainly, I think you can tell from the chart that investors liked it. So it was rising steadily, and all of a sudden they had a leap over the last 2 years, and last year started coming off. It's trading at about 78, half from the peak. So it's not looking good.
So do you think that we're going to see a recovery in this one?
You know what, with the Brexit issue, there are challenges there, and also we have to realize that, I mean, if the rand weakens, possibly it will be able to improve the performance from a South African perspective.
Because of the rand,
because
rand
of the
aspect.
hedge aspect, yeah.
The problem is we saw it sag from the mid-70s to the low 70s this week because of Theresa May's comments about a hard Brexit, because, I mean, I think they've looked at other kinds of Brexit.
And there's no option.
That doesn't really work. So they're talking now about basically just tossing in the towel, going for an exit, losing European common market access, which means that trade is not free and you have to do border access and control. So that's not good for them, because New Look is trying to expand into continental Europe, and that also means potentially that the UK might have some quarters of economic disruption. So it's all kind of compounding right now.
Does that mean that we are going to get rid of Brait, Paul? That's the big question, I think.
You know, they measure the group's value by NAVs. So in the most recent numbers, they thought that they should have a net asset value of around 105 rands a share. So we're trading below that now. So it's kind of periods of optimism and negativity. They've got a European-based presence. They've got a European-based assets now, in addition to the ones we've talked about. And they've got access to cash and credit. John Nodder is a very creative and hardworking private equity operator that's done very well in the past. So I'd be inclined just to sit and wait and see what happens.
Sit and wait. We're not going to get rid of the stock at this point. Joseph, would you concur with Paul's stance that if you are a holder, if you've held it, you've gone all the way to the top and you've gone all the way to current levels, so you've lost...
You don't want to lock in your losses, so you rather hold it. So if you look in terms of price to book ratio, it's about 1, and focus really is just predicting that it's going to remain a little bit attractive going forward. So it's best, I think, to wait there and hold on to the stock.
That's interesting. So in other words, if you don't own them now, you probably wouldn't, right?
Yes, exactly.
Which means it's not hot.
Yep. Not hot.
But if you own them already, then, you know.
The opportunity cost of selling out at this level is just a little bit too high. I think if we use that
although I think I like the idea that you should always have the discipline of kind of reviewing your options. But I'm inclined, in a case like this, to back the management team to sweat it out, which is to roll with the punches. You know, the market value of a share is really only formed in the market. The company itself will do what it'll do.
Can I remind you of African Bank at this stage? Sometimes it might be a good idea to bail.
No, that is true. Sometimes, you know, you can get into a very difficult situation, but operationally and trading-wise, these businesses remain very good.
And Visa, as we mentioned earlier, you've got some strong names in there from a management perspective. John Nodder.
And the danger internal to the business is not as acute as it was with African Bank. You know, we're dealing with a levered business model which can ratchet downwards in a very negative way. These are really just firm. I mean, if you go to the gyms, Virgin Actives, they're full. You know, they're opening new ones. People are turning up in the mornings.
And actually, they say that the African gyms actually has got the highest turnover in the world, about $900 million last year.
It's a strong business.
Not hot though.
Not hot.
hot.
Yeah.